Hello folks and welcome today. My name is Robert. I'm going to be your presenter and host. We're going to talk about an amazing opportunity, an opportunity that couldn't have come at a better time in this economy. We are helping homeowners stay in their homes. We're helping business owners keep their businesses up and running and thriving with this particular program. You have an opportunity right now to be part of a tremendous opportunity where you can earn a substantial amount of money. What I'm going to do is I'm going to show you some information. We're going to talk about some news stories. This is information that you can verify. It is all factual information. You're in the right place at the right time. We are strategically in a position right now to bail this company out, to basically take the money from Wall Street and bring it to Main Street by helping these homeowners and businesses, because banks today are not loaning money out. People are upside down or underwater on their homes. We have a program and a product today, folks, that is literally going to help bail this country out, and you have a chance to be part of it. So let's get started. We're going to show you some news pieces here. That's the first thing that we want to show you. We're going to talk about some news again that you can certainly verify. Here's a company called ECRI. They're talking about a potential new recession that's unavoidable. We're already in a recession, folks, but imagine we're talking about another recession that's headed our way that is unavoidable. This gentleman who makes these market predictions is usually 99% on the money. So again, we need to brace ourselves for that. We have another story here. Number of poor hit record, 46 million in 2010. How amazing is that? That's about 15% of the entire population, and it's probably much higher today. In that amount of time from 2010 to 2011. That number is steadily growing daily with all the unemployment and things that are going on in this economy, people losing jobs. The number grows on a daily basis. So folks, we're headed for a really rough time, but at the same time we have a chance to take advantage of this economy and make some money from it while we're in this down situation. Unemployment, we talked a little bit about that, rises fastest in 2 years. Since the Great Depression, there hasn't been more job losses in the history of this country. Occupy Wall Street. This is a great story. I like to show people this. As you know, this is a protest. This is a movement. This is something that's going on. It started out as a small group of people in one city and one town, and it's grew not only nationally, but it's actually becoming a worldwide movement, folks. People are tired. They're sick and tired of the rich and being abused by the system, by the banking system in particular. People are losing money, jobs, losing their homes. This country is finally standing up and making a voice for themselves. This has been going on for way too long, and it's time that we take our country back. I like to show everybody this particular website is realtytrack.com. This basically will give you an idea what's going on in the country foreclosure-wise. You can Google this. You can go right to the website here. Take a look at this map. The darker red, the more foreclosures. Notice that the entire country is red. Everything is in red because we have foreclosures going on throughout the entire nation. In fact, the country's national average right now is 1 in 570 homes are in foreclosure. That is a phenomenal amount of people. Look at Alaska, for crying out loud. Let's take a look at Nevada. Nevada's leading the country right now. They have over 9,000 foreclosed properties or foreclosure properties right now. That number grows daily. 1 in every 118 housing units are in foreclosure. Idaho, 1 in every 348 housing units in foreclosure. California, 1 in 226 housing units in foreclosure. Pretty amazing, folks. Over 1.5 million homes in foreclosure right now, according to these statistics. That number grows daily. As a matter of fact, there are over 6.5 million people right now who are delinquent or behind on their mortgages. So again, these numbers are only going to grow on a daily basis. We have a stagnant job market right now, high unemployment, lost wages, reduced hours. We have an epidemic here, folks. The great news is our opportunity is going to put you in a situation where you can still make money in a down economy. So let's talk about that right now, folks. The program that we're talking about today is a smart sale and leaseback program. We're realty funding partners. Now, what we do is we provide private equity funds to homeowners, commercial and residential, for business and financing needs. We have the largest portfolio of private lending private lending institutions and investor-backed funding sources available today. As a matter of fact, we have over $400 billion of private equity funds available for this particular bailout situation that we're looking at today. So whether it's a residential or a business, we have the funds available to help these folks out and to turn their situations around. Our company founder is Dr. Hunter Elam. He has a PhD in information technologies. This gentleman has owned and operated many successful multi-million-dollar tech companies. He's had these established relationships with various private equity firms for many, many years. And what Dr. Hunter Elam has seen in this economy is a void that the banking industry left behind. Again, whether you own a business or a home or you're upside down, banks are not lending money right now. Consumer financing is at an all-time low. People are not able to get personal loans. All of that, basically, it's a huge pocket that has been left behind. They basically dropped the ball on all lending altogether. He has put together realty funding partners to pick that ball up and provide the funds needed for these various scenarios. Now, our mission is to provide our clients with optimal funding solutions. It is a national program, and it does address a number of financial situations. We are looking for homeowners who are upside down, underwater, unable to pay their existing payments, or simply delinquent on their mortgage payments. We talk about the feds are suing the banks. This is another article I came across, very interesting. Right now it's called the Broad Legal Assault. 17 major banks named. What's great about this, folks, is it potentially puts the banks in a vulnerable position for our program to be successful. Remember that banks are not realtors. They don't want to have these toxic mortgages on their books. They want to get rid of them. And that puts our partner company, our partner private equity fund, in a strategic position to be able to accomplish the program that we're going to talk about today. Now, what are the options for a homeowner? Let's assume you have a homeowner who's in trouble. Well, what can they do? Well, they have a couple of options. Option number one is they can simply do nothing. Do nothing and ignore the problem. Well, that's not a good solution, because sooner or later something's going to happen and they're going to have to move. They're going to be removed from that property. In some situations, unfortunately, in some states, when you're not home, the government will come in and basically remove your furniture from your home, lock you out of your house, and you have nowhere to live. This is happening across the country, folks. It's not a good idea to ignore your situation. The second option would be to go for a loan modification. Well, if anybody's done any research, we know that these loan modifications aren't working. None of the government programs that are out right now have done anything to make any type of significant dent in this housing problem. Loan modifications simply just aren't working. They're not helping folks out. Refinance. Well, you can certainly try to refinance your home. The client can do that, but unfortunately, there's no money available, or they're upside down, or they simply don't have the credit score. Look at the lending guidelines today for refinancing. No one can simply meet these guidelines in order to refinance. So that option's out of the question. They can certainly file bankruptcy. Well, you have a Chapter 7 and you have a Chapter 13. If you want to keep your home and you're behind, well, you're going to have to file a Chapter 13. That's if you qualify. 2005, the bankruptcy laws were changed. It's more difficult today to file bankruptcy than it was prior to 2005. And the bankruptcy laws basically have been changed in favor of the creditors. So if you are able to file a bankruptcy and you're a homeowner and you're behind, great, you can file a Chapter 13. The problem is you're going to create another bill for yourself, another debt, because you're going to continue to pay your mortgage. However, you're going to have a new bankruptcy payment you're going to have to pay as well on top of that. And the fact is, if you can't afford your mortgage now, how are you going to afford your mortgage and continue to pay a bankruptcy? Just doesn't work. How about your uncle, your rich uncle? Do you have a rich uncle that you can go to and borrow money from? Well, most of us don't, so that option's out of the equation. Now, our program, let's talk about what it isn't. First of all, we are not a foreclosure rescue program. It is not a short sale program, and it isn't a mortgage modification program. Our program is what's called a smart sale and leaseback program, which we're going to talk about in a few slides, but let's talk about what the program goals are. The first goal of the program is to purchase that homeowner's upside down home within a 30-day period. At that time, we are going to offer a lease to purchase to that homeowner anywhere from 3 to 7 years for anywhere of a discount of 40 to 60% less than what they currently pay on their mortgage payment. Now, in addition to that, we are going to offer that homeowner an option memorandum. This option memorandum, which is part of their lease, will be recorded along with their deed, so it is public information, it is transparent, and it grants them exclusive right to purchase their home back at the end of that 3-year lease or 7-year lease, whatever lease they have. So simply what's happening here, folks, is that this is a transparent program for the homeowner. We're not buying homes simply to undersell that homeowner. They have the exclusive right to purchase that home back at the lease end. Now, during the lease period, at that point, we are negotiating the note with the lender because we don't have possession of that note. Although we're purchasing that home, we do not take possession of the note. We do take possession of the deed, and we do have the homeowner sign the deed over, but in addition, we have them also fill out a lease agreement along with some other documentation in order for us to successfully negotiate with the lender. So during that lease period, we are negotiating the note with the lender anywhere from a 40 to 60% discount. Now, I know the first thing you're thinking in your mind is, why would a lender allow us to do this, or why would they be willing to negotiate? It's very, very simple. If you do your research, if you look up MERS, M-E-R-S, if you look up robo-signing, or check out what's called a forensic loan audit or securitization audit, you're going to find that there's been a lot of fraud on most of the loans that were taken out in the past several years. Not only were documents signed electronically or by robots, number one, but number two, there were missignatures. A forensic loan audit is actually going to pick up RESPA violations, truth in lending violations. The securitization audit is going to pick up the fraud that was done on the majority of these loans. So we already know, the banks know, that these are fraudulent loans. So they're willing to sit down with us at this point and negotiate these non-performing assets with us. Because the bottom line is, people are not making these mortgage payments. They're just too high. And number two, these are illegal mortgages. So that is the leverage we're using to negotiate. Now again, if the lender doesn't negotiate, the forensic loan audit is going to be done, and we're going to file suit in federal court. We're also going to file a temporary restraining order against that lender, preventing them from foreclosing on the property. This is going to force the bank to negotiate. You have to understand that the banks know, and we know, that these are illegal mortgages. So they really don't have a leg to stand in federal court, number one. And number two, what judge in his or her right mind is going to allow a lender to foreclose on someone when in fact we can prove or provide evidence that it's an illegal mortgage? It just isn't going to happen. In addition to that, because that homeowner is now a tenant, they're paying a lease. If you look at the 2009 Foreclosure Act, you will see that that homeowner is protected, that that tenant at this point is protected. They cannot be removed from the property because they're simply a tenant. And the Foreclosure Act of 2009 protects against that. At the end of the lease period, here's what happens. We're going to sell the home back to the client at 90%. Now, I know you're probably thinking, you bought the house for 40 to 60, you're going to sell it at 90%. That's a pretty much of a stretch. You're taking advantage of the homeowner, when in fact we're not. Let's take a closer look at this example. If we have a client in 2011 who owes $250,000 on their mortgage and has a current market value of $200,000, okay, they're upside down. Our goal is to purchase this $250,000 note at roughly, I'm going to use 60%, during the 3-year lease period. 60% of $250,000 is $150,000. So far we're doing pretty good. We have a $250,000 note that we were been able to successfully reduce to $150,000. Okay, that is taking place during that 3-year lease period in this example. It could be as many as 5 or 7, but we're going to use 3 years as an example. Now, at the end of the 3-year lease period, we're going to assume that the property value has increased, because in 2011 it was $200,000. In 2014, it's worth $218,000. How did I get that number? Well, I took 3% as a property increase every year for the next 3 years, which gave me $218,000. So at that time, the homeowner is in a position, they're ready to buy their home back. We're going to sell it to them at 90%, as we stated up here. Well, 90% of $218,000 is $196,000. If we stopped right there, you will see that a homeowner went from $250,000 to a new loan amount of $196,000. They're doing pretty good so far. But it doesn't stop there, folks, because what we're going to do is we're going to provide them 60% back of a credit at closing for all lease payments that were made. Now, I'm basing this figure on $1,000 a month. That is the minimal lease payment we will allow with this program. So we're going to assume that this homeowner is paying $1,000 a month for 36 months, which means they gave us $36,000. We're going to take 60% of that, which is $21,600. We're going to remove that from the $196 or credit it. So now they're getting a home for $174,000. So if you look at this situation in this scenario, it's a win-win situation for us, because yes, we bought it for $150,000, we sold it for $174,000 or $175,000. The homeowner wins because they had a $250,000 mortgage 3 years prior that was reduced to $174,000. So we basically saved them $75,000. And of course, the bank wins because they got rid of a non-performing asset off of their books. Here's the program criteria. They must be able to afford at least $1,000 a month. That is the minimal lease payment we will accept. If the first and second mortgage balance on that home is $200,000 or more, up to $10 million, that is something we will take a look at. Okay, that's the second part of the criteria. Number 3, there are no fees to the homeowner, but they must be willing to lease the home for 3 years and bring 3 lease payments to the initial closing, the initial lease closing. That initial lease closing happens in about a 30-day period from the time we initially enroll them. Finally, we will work with owner and non-owner occupied homes. Let's talk about the 3 lease payments for a minute. You have a client who's living in a home which they cannot afford. Sooner or later, that client is going to lose that home. So that means that that client is going to have to pay moving expenses. They're going to have to look for a place to live. They're going to have to come up with security and rental deposits for their new place. Well, why would a homeowner do that when we simply have a program here today that can keep them in that home for an extended period of time without uprooting them from the schools, the kids from schools, or out of the neighborhood, or coming up with all these additional expenses? This program is designed to keep that homeowner in their property for anywhere from 3 to 7 years with the possibility of buying that home back at the end of that lease term. It's a win-win situation for the homeowner, folks. Now, the process is simple. The client is going to complete what we call an intake form. It's a very general application. They're also going to sign a non-disclosure form as well. Those 2 forms are going to be forwarded to corporate, and within 7 days, that homeowner will receive an email. They're either going to be approved or denied. You, as the associate, will also get a copy of that email showing whether or not that homeowner was approved or denied. In that email will be some instructions for that homeowner. There's some paperwork they're going to have to complete and return, and they have 7 days to do that. If they don't return it within the 7-day period, the deal is off. We go on to the next homeowner. From there, it goes back to the fund. It gets reviewed again. At that point, the fund sets up a closing that occurs anywhere from 2 to 4 weeks later. At that time, the client signs their new lease agreement at that closing, and they begin their new lease. So this whole process here takes approximately 30 days. The benefits to the homeowner: potentially save the client's home. Over 90% of homeowners are accepted in this program. That's pretty phenomenal. That means 9 out of 10 people you submit are going to be accepted in the program. the great thing for the homeowner is that they're not going to be responsible for a deficiency balance. And what I mean by that is because we're getting the property at a discount and there's going to be a deficiency balance, that will not be passed on to the homeowner. Under normal circumstances, the homeowner would receive a 1099 from the bank, and they will have to pay taxes or claim that deficiency balance as income. We're reducing the client's homeowner's payments anywhere from 40 to 60%. But the most important thing, folks, is that we're helping homeowners and we're giving them peace of mind. Now, you as an associate, how it will benefit you is you're going to be part of the solution and not the problem. We're helping save homes, marriages, and potentially people's lives. Now, if you are in the industry, if you're in the mortgage industry, if you're a real estate agent, if you're an insurance agent, if you're a loan modification person, debt settlement, if you have direct contact with homeowners, potential homeowners or clients, this is a great outlet for you because you can't help everyone you come across, especially if you're working in the modification industry. So you can take all of those dead files, throw them into this pipeline, and earn income on them, and at the same time help homeowners. Now, of course, we're going to pay you on your transactions. We do pay once a month. But the biggest thing about this opportunity, folks, is you're going to be able to share in the company's revenue at the end of every lease period. We have monthly and quarterly bonuses as well, which we're going to talk about in the next few slides. The average commission on every deal is approximately $705. How do we get that? Well, the average lease payment is $1,700. You are going to get a roughly 41% of the initial lease payment, only one lease payment. 41% of $1,700 is approximately $705. We are going to pay you on your deals once a month. It's a $10.99 commission, and it's paid on the 15th of every month. So if you were just to do a conservative 5 deals a month yourself, you would earn an additional $3,500 a month. 10 files, $7,000, 20 files, $14,000. Now we have other commissions on top of this, but again, just as a general rule, I want to show you the initial commissions up front and what type of money you can earn just by from your own production. Now let's take a closer look at potential earnings. This is important. When you come on board with the company, you come on board as an associate. All right. So as an associate, we're going to continue paying an average commission on your deals of $705. But if you decide that you want to establish a team, and I repeat, this is not a multi-level marketing opportunity, not a multi-level marketing opportunity. But if you want to recruit people, you can do that. You can build a team. Why not? You don't have to build a team, but this is a great opportunity for you if you want to earn additional income. You can build a team, and we will pay you 10% check match on their earnings. So if that team brought in $10,000, you are going to earn an additional $1,000 on top of your own commission. Once you have 3 people on your team, whether you brought 1 in and John brought in 2, or you brought all 3 people in, you automatically become a senior associate. We'll continue paying you on your own deals. We're going to continue to pay you 10% on your direct team, and anybody they bring in, you'll get 5% of. Now, once you hit 12 people, you become a team leader. This is where the income gets very powerful, because as a team leader, we'll continue to pay you the $705. We're going to continue to pay you the 10% on your direct team, but now you're going to participate in a company-wide team leader monthly pool. That means that all of the business that your group writes and all of the business that all of the other team leaders groups write on a monthly basis, the revenues from those profits, go into a pool for which all of you team leaders will share in. Becoming a branch manager is as simple as having 39 people on your group or in your team. Once you hit that level, the company will pay you a salary of $1,000 a month. We'll continue paying you on your personal deals, but now you're going to share in the branch manager's pool. So all of the other branch managers, including yourself, that are on the team will share in all of the branch managers' monthly revenue pool. That's in addition to your $1,000. It's in addition to your $705 on average on your personal deals, and it's in addition to the 10% that you earn on your direct personal team. Now, here's the biggest thing. The greatest thing about this opportunity are the lease pools, the end of lease pools, we call them, meaning all of the leases that are written. So, for example, let's look at the month of October, or let's say November. For every lease that's written company-wide in the month of November, those leases, assuming they're all 3-year leases, are going to expire in 2014 of November. When they expire, those homes will be sold. And when those homes are sold, revenue is created. We make a profit. All of those profits go into a pot for which you will have an opportunity to earn a piece of. Now, it's been estimated that that pool will be worth over $6 million when that happens. So, that's just 1 month. So for everything that's done in the month of November in 2000, let's say in 2011, that expires in 2014, that's sold, all of that revenue will go into a pot for which every person in the company from associate on up will receive a percentage of. Everything from December, all of those deals, when they go in, you will receive a percentage of that pot, month in and month out, every month. And that's on top of everything else that we show you here. Now, the criteria for you to get that is that you must be active in the company. You must be an active participant in the company. We'll talk about what that is a few slides from now. The other criteria is, in order to get those, you must have a 3-year tenure. Okay? Since our leases are 3 years, once those expire, you have your 3-year tenure, then you're eligible to participate as long as you're active. There's a huge amount of money to be made here, folks. And I'm not going to tell you that you're going to get rich from this opportunity. I'm not going to tell you you're going to make all this money every month or $20,000, $30,000 a month. I'm not here to hype up what you could make. But if you look at these numbers, they are very realistic. We have a product right now that no one has. And the majority of this country, the majority of the homeowners need this product. You are in a position right now to offer this product to the homeowners. We haven't even talked about our commercial leaseback program, where the commissions on those are much higher. I will save that for another day. But again, what a phenomenal opportunity. We're in the right place at the right time. Now, we also have quarterly bonuses you'll start earning once you become a branch manager. And again, that's in addition to everything I just indicated. Now, what are we giving you, the associate, for becoming part of this team, for coming onto the team, rather? Number one, you're going to get a personal website. That personal website, if you take a look at our website, it's a very expensive website. If you were to design and build your own website, it would literally cost you thousands of dollars. Not only that, but you have to market that website. Marketing a website could be several more $1,000s. In addition to that, you have to have hosting for the website. That's about $20 or $30 a month. So just the website alone is literally worth thousands of dollars. You have marketing materials in your back office that you have access to, pre-approved marketing materials that have proven results. Continued ongoing support and training. You can't even put a price on that. Recruiting tools. If you decide you want to recruit folks, well, we'll make those tools available to you. Multiple, and I say multiple financial products. We have several new products on the horizon that you can tap into as well. That's all part of this opportunity. This is just one of the many multiple products, financial products we offer that you can utilize and you can tap into as an income stream. A CRM back office system that you can use, follow-up system. A product that's virtually limited competition. We're going to give you leads, team leads. If you want to recruit a team, we'll give you leads. Just ask for them. Customer leads. The company is in the process of putting together $1 million advertising campaign to homeowners who are in distress, to businesses, to commercial properties who are upside down and in distress. Okay? The company, starting in November 2011, is going to drop $1 million towards advertising, radio, TV, internet, print, billboards. We're going to reach out to homeowners and businesses who need this product. No one has it. They can't go anywhere else to get it. And more importantly, they can't go to the banks and get any money because banks aren't lending, or they're upside down right now. This is a product that no one has. We're going to give you these leads as well. What does a lead cost? Well, if you know anything about sales, or if you're in the sales industry, or if you bought sales leads before, leads are very expensive. Anywhere from $20 for one lead to as much as $50, $60 for one lead. We're going to give these to you. More importantly, folks, though, a strategic plan to retire in 3 years. Think about all of those leases company-wide. You're going to get paid on other people's production you've never met with this opportunity. We're talking about literally in that pot millions of dollars for which you will get a share of. What a phenomenal opportunity. We're in the right place, folks, at the right time. Now, is this a job or an opportunity? Well, you noticed I never used the word job. I constantly said it's an opportunity. In this opportunity, there is a cost. Okay? The reason what you're paying for is you're paying for all of this. But more importantly, we're giving you leads. So if you're looking for a job, this is not the place. A job is just over broke, in my opinion. But if you're looking for an opportunity, if you're entrepreneurial minded, if you're a go-getter, then this is the opportunity for you. $149 is what this is going to cost you. Now, my question to you is, do you look at the $149 as an investment, or do you look at it as a cost? Because if you look at it as a cost, then obviously the opportunity isn't for you. We thank you for attending. We understand it's not for everyone. But if you look at it as an investment, and everything you get, the fact that we have a program and product that no one has, we have a product that people need and people want, we have other products that you can tap into, and it all falls under this one umbrella. You're in the right place at the right time. This foreclosure epidemic isn't going to go away. It's going to get worse. In addition to that, the commercial foreclosure wave is coming. We haven't even talked about the commissions on those that you can earn. The business is out there, and we have the product. We have an innovative product right now to offer these homeowners and businesses that no one else has. So what I advise you to do now is get back with the person who referred you to this webinar. You might have some additional questions. They'll be happy to answer those questions for you. Or maybe, perhaps you're ready to sign up. Then we look forward to having you onto our team. Thank you so much, and enjoy your day.